Yeah, this is a video response to CNBC, Marc Faber's 2013 outlook. I follow this guy pretty close. And he had said that he's in cash, that he's bearish on everything. He prefers the dollar to the euro. He said in the ugly contest it wouldn't lose. That's all he said. So I guess he still thinks it's ugly. So I decided to just take a look at some charts. This first one, I hope you can see that. This is a US dollar long-term chart. This is on a guy named Jesse Cafe American. Okay, this is going back to the early 80s. This is probably when Mr. Reagan came in. He did a Plaza Accord. I don't know exactly what that did, but we had a bust. Here it says here, 51% decline in 4 years. So then we trailed up and up and up and down, 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 down. So it has long-term trading range support right here. That's where it's saying there's support. Wherever that is. This doesn't have an index over here. But at any rate, here's Clinton. Clinton was very good for the dollar. It was a big jump. So you got up here, beginning of the bull market in gold and silver. So it's about now year 2000 when Mr. Clinton left office. Here's Mr. Bush too, or W, when W came in. And W was not good for the dollar. He dropped below. He cracked through support. This is remember this is Reagan. These are the Bush years. Bush won. He kind of did nothing, and we bottomed. It doesn't indicate a year. But here's the euro dollar squeeze. This is the euro dollar squeeze. So this I don't like the looks of that. So yeah, that shows it. So the dollar has lost, but I mean it hasn't went to nothing. I mean, and if you look at the U.S. dollar, this is a 3-year chart. Here's the top. This happened right after the 2008 crash. The dollar went way up. I don't know if you remember that, but the dollar was really strong and the stock market was weak. And then they flipped. There's almost an inverse relationship between this and the stock market. The S&P and the NASDAQ, what have you. But, I mean, so in the past 3 years, we've had a high of about 90, and we've had a low of about 73, and now we're about 80. So really, it's doing fine. The dollar's fine. So let's look at some of these. Okay, here's the CRB, which this is an index of all the commodities that exist in the whole world, right here. So it's pretty level. This is a year. This is going back a year. The RSI, which is an indicator, it's sort of in the middle. It could go either way. This is the agricultural index. This is probably what you call your food. Food's down. Here's an energy index, as you're probably aware of. You know, it's still about even. This is where it was a year ago. It's worked back up to that, and it dropped below that. I don't know if you saw your gas prices go down, but I think they did. They did quite a bit. These are industrial metals, which have stayed about the same. I believe this one is precious metals. This one looks pretty. This one looks. We'll take a look at that one a little closer. This one also is trading water. What's this one? That's the precious metals. Excuse me. That was precious. Oh, this is livestock. There we go. Yeah, so our stakes are higher. That's what it looks like to me. How far am I going back here? Weekly, 2011. Yeah, let's take a look at the weekly. Let's take a little closer look. Fill the chart. Let's go back 3 years. Update. Yeah. Yeah, stakes are heading up. Yeah, that looks pretty bullish to me. Looks pretty bullish. I mean, if you'll notice, there's higher lows. Higher lows almost. This is a lower high. This is a higher low. So, yeah. Put some steaks in the freezer. So, Mr. Faber, for this interview for him, he was quite demure, quite laid back. He didn't really make any pronouncements. I think he's bearish on the year. He said he would buy Vietnam, he'd buy China, he'd buy stock markets that were down. He didn't really pick any stocks. He didn't really say anything outlandish. It was just basically for him, he was very laid back. Okay, thank you.